Sunday Night Live.
Sunday Night Live, let's trade. Sunday Night Live, let's trade.
Welcome in. Lights up, we're rolling. Who's locked in and ready to go? From the open to the futures flowing. We're the Crude, I want to know. Stocks on deck, who's watching?
We are.
Shots on fire, hearts are locked in.
We are.
Welcome to the Sunday Night Live trading show. When we say ho, you say let's go, let's go. Oh, let's go, let's go. Oh, let's go. Join us as we ride every wave, high and low. Huddle together, let's trade. Energies move tick by tick now. Metal shine, golden grit now. Crypto swings wild and reckless.
We don't think
We break it down, turn the stress list.
link by link.
Welcome to the Sunday Night Live trading show. When we say ho, you say let's go, let's go. Oh, let's go, let's go. Oh, let's go. Join us as we ride every wave, high and low.
Huddle together, let's trade.
Oh, let's trade.
Let's trade.
Let's trade. Who's in the huddle?
We're in the huddle.
Who's got a plan?
We've got a plan.
Who's trading smart now?
We're trading smart now.
All together.
Raise that hand.
Welcome to the Sunday Night Live trading show. When we say huddle, you say let's go, let's go. Oh, let's go, let's go. Oh, let's go. From stocks to energies, metals, crypto flow. Huddle together, let's trade.
Good evening, all. Welcome to the Sunday Night Live trading show. I hope you enjoyed the song. I had a little bit of fun. Got back to the office yesterday from my travels, and I had a little bit of fun this morning just making a song as an intro. So I hope you enjoyed it. Welcome to the show, everyone. We're going to start in a couple of minutes' time. Very pleased to see that everyone's here. I'm very pleased to be back in my office and with all my equipment, so everything's working well. I've done a few notes for you, which I'll go through in the first 5 minutes, and then after that, we'll go straight into the charts. And then if there's some time thereafter, I'll take your questions too. So thank you for being here, everyone. I really appreciate it. And I'd also like you to like and subscribe while you're here. Just click those buttons underneath the video. Subscribe to the channel. Really appreciate that. And it helps the channel grow. And everything that we do here, including making AI songs, makes it a little bit easier when we have people subscribed. So we've been growing very fast recently, and I thank you for all of you who have just recently subscribed and joined the channel. So welcome to all of you, Vishesh and Yayat and Emily, Amit. So it's a different, and good day, Dennis. I'm not sure if you don't like the song, Dennis, or you do. I see you have a tut there, and maybe about the song. But anyway. So Arctic blasts and storm forecasts across the show. So folks, please settle in, and we're going to start in a couple of minutes time, just about a minute or so, I suppose, because we're just ahead of time. I just want to check the sound, and now that I'm back in the office, everything seems to be working okay. And I hope you can all hear me. Hi, Eek Singh, Ekeng, and and Vishesh. Yeah, talking about Arctic blasts. And greetings to you, Simon, from Folkestone. Yeah, we talked about Folkestone yesterday, or last week, Simon. It's a road I used to live in. I know the town very well. Good day, Ole from Germany. All right, folks, I'm just going to start getting these notes set up, and we will start at the top of the hour. Once again, welcome to everyone as we begin this show. And please make yourself at home, and please like and subscribe, as I said earlier. I'm going to go into the notes now. Let me just quickly find them and say hello to a few more people while we wait. Martin, nice to see you, Martin. Next week will be really exciting for sure. Now, let's start, folks. We've just ticked over, and I don't want to delay, so I'm going to go into the notes. And then we're also going to look at the natural gas COT report and natural gas weather. And just to remind you as well that you should go across to my channel at ArcisFX on X and subscribe there. But let's have a look at the notes. So a couple of things happened over this last week, which were a little bit concerning, I suppose, for markets overall. Well, very concerning, really. The imminence of war in the Middle East, which might be any day now, and from what generals and Trump are saying, it could be even like tonight, before the markets open, at least tomorrow, or any time from now on. And we don't know quite what the effect on the markets will be of war, but in my experience, generally war doesn't do too much damage to equity markets and risk markets in general. And we could see perhaps an initial dip, and then a short-term dip, and then a rally thereafter as war brings along a lot of spending and a lot of opportunity to make money. We also saw that the Supreme Court of the United States turned down the tariff setup that Trump and the administration has put up, and just ruled against it. So against the tariff. So what Donald Trump did very shortly thereafter said, and I'm not sure if it's 10 or 15, or if it makes any sense, or if it's going to happen, or anything about it, but he's claiming to slap a 10 to 15% tariff on the entire world as a snub to the to SCOTUS. So who knows what that'll do, but we can read some, I've got some notes on that, some thoughts. And then GDP, we saw the GDP very low last week, coming in much less than expected. And instead of massive growth, which is forecast, or not massive, relatively strong growth, which was forecast, around about 3.5 to 4.5%, we got around about 1% growth, which was very disappointing and points to a weaker economy, weaker than expected. And we also saw inflation in terms of PCE, the number that the Fed likes to look at, rising quite sharply and not going down, not as low as expected. So GDP down and inflation up, there's a word for that. And I mentioned it last week in the private group. Those of you who will know, the word for that is stagflation. In other words, the economy is stagnant, but we've got inflation going on, which is the case kind of at the moment. Inflation slightly elevated, and GDP a long way down. And that means that it's very difficult for us to stimulate the economy with liquidity injection and rate cuts if inflation is heading to the higher side. So we get stagflation. Inflation's high, but the economy is weak. I'm not saying we've got that, and there are certain numbers that are going to be done or produced to get to that conclusion. But that word has already appeared not only on X and on YouTube, but also in some of the more serious publications. So that word that I used, I think for the first time, you'll probably hear it more and more. Now, let's talk about this. I've just made some notes here. I think that's it. And then the PCE, the inflation up. Now, let's talk about this. A blanket 15% tariff across trading partners backed by a Supreme Court ruling is not just political noise, it's actually structural. And this is a tax, right? So higher import prices, sticky inflation, inflationary risk always comes around when we talk about tariffs. And the Fed may not have the flexibility, as I said, to manipulate interest rates and so on to sort it out. And of course, there's the job situation as well, which is also not looking particularly strong. And so, we probably need lower rates, but inflation's a bit high, and we need to stimulate the economy by the looks of things. So, yeah, so I'm not going to read through all of it. Inflation without growth is a big risk. Sector winners and losers, of course, as we look at what's going on in the world with war and this potential rotation out of, between sectors, we might look at aerospace and defense stocks, domestic, industrial and materials, energy, volatility plays, always volatility in energy, and AI structural names, etc. We'll talk about that maybe when we come to the charts. And are we going to see a flush or a failure in assets, hard assets, and also even risk assets? So I don't know. We're talking about Bitcoin, stocks, commodities, energies, that sort of thing. We'll have a look at the charts. I'm going to put these notes up in the private group for those of you who are members, so you can read this after the meeting, after this session, and have a look at some of the thoughts that I've got up here. I want to quickly point out, there's quite a lot of notes here, quite a long set of notes. We're talking about metals and Bitcoin, what's going on. I'll try and cover some of this in the charts when we get to it. But I want to talk about natural gas. And quickly, before we look at the COT report, setting us up for this next week or two, now that we've rolled over into the new contract, and we have a new front month contract. And I'm just going to read through what comes from the COT report. Let me just find that. A lot of waffle here. Here we go. So the big picture, there's no capitulation on natural gas. Yes, we've moved a bit lower, but as you'll have noticed from the price action, we're gradually inching lower. And the COT report kind of explains why. And we've got the COT report on the 17th, so we've got the next report. And it doesn't show panic selling, capitulation, but just shifting of positioning. Let's have a look at who's doing what. The commercials, the smart money, added longs on aggressively, and shorts barely changed. So long, as you can see, a lot of contracts here, 616,000, adding 10% on, and barely adjusting the short side, which is significantly lower. So leaning slightly more into constructive into weakness. In other words, accumulating into weakness rather than selling aggressively. Now, producers, longs up a little bit as well, shorts down a bit, and producers increasing longs into weakness. Interesting. Managed money, perhaps the weekends. It's always, is the managed money right, or are the commercials or the retailers right? They're not always perfectly aligned, and they're not always. It's not always like the managed money that's correct, retailers are incorrect, or commercials are wrong. Any one of them can get it wrong at any time. We've seen occasions when retailers got it right, and commercials and hedge fund money, that sort of thing, speculators have got it wrong. So it doesn't mean that because they're one way or the other that they're correct, but basically flat on the longs, not changing much, but increasing the shorts. So they're going the other way around. And non-commercials also slightly down on the longs. And then the swap dealers seem to be leaning to the long side. And so just as a couple of notes, is the bottom in? No, it's not confirmed, but it looks like as around $3, we might be looking for a bottom, or just below $3. And it seems like we're accumulating rather than capitulation selling. And so, but we do have a bear flag breakdown. We are seeing an increase in shorts with the managed money, the funds, but the commercials are increasing alongside, and those also could be hedges. So this is a market that can drift lower slowly, and it could do it for another few days. And of course, this will be very weather dependent, or if there is a violent weather change or any other supply side shock, perhaps, or LNG or terminal supply shock, anything like that, we could get a pretty severe short squeeze, an asymmetric move, if you will. Now, that all comes from this natural gas COT report, which I've just kind of summarized for you. And if you'd like to go and read this for yourself, you can go to barchart.com. It's free. You can also subscribe to get rid of the adverts if you want to. You can see I've got an advert at the bottom and one in the middle, adverts everywhere. But actually, all the information's there, so you don't have to pay for this. And it's quite expensive. I think about $100 a month. Well, it's not that expensive, but it's not cheap. So you can get that all from here, the COT report at barchart.com. And then let's have a look at what the weather report says. There's not much because this is a bit old, but I'll just read the notes from Nat Gas Weather for the period 17 to 23 of Feb. That's ending that tomorrow, basically. And I think we read this one out last time. Chilly weather systems will sweep across the west with highs of 20s to 50s, and then warming several degrees this weekend into next week. The eastern 2/3 of the US will be much warmer, etc., etc. Then getting colder Saturday through Tuesday. That's, I assume, like yesterday through until tomorrow, the next day, bringing much colder weather and overall a low demand for the next 2 days, and then increasing to high. Now, this was written on the 17th, so from the 19th onwards, they're expecting higher demand. We've seen this from some of the other weather models running too. Just a reminder, folks, please go and join me on X, ArcisFX on X, and not subscribe, follow me on here, because I put up posts all through the day when we're not making videos and stuff. A lot of the stuff doesn't make it to video. So go and just follow me on X. It's free, and there's a lot more info. If you like these videos and you find them useful and beneficial, go and join the X channel too. Now I'm going to switch across to the charts right away, and I will get to your questions and greet all of you as we go along. But I just want to let's just get the charts up to start with. No, not that one. Here we go. All right, there we go. All right, we've got the charts up. Just checking to see that everyone can hear me okay. Can you all hear okay? WTI, we'll talk about that shortly. And what was this question about? WTI? Yeah, all right, we'll talk about that. And greetings, Jazz from Cali. Thoughts on natural gas. So a lot of people are interested in energies. So let's go on to that straight away. In fact, what I'm going to do is I'll start with natural gas. The danger is actually when I start with natural gas, half the viewers leave because they're not interested in everything else. It's one of those sort of instruments that everyone loves to trade. So let's perhaps I'll start with natural gas. Why not? I'm sure there are people that are interested in other things. So let's have a look, first of all, at the futures chart. And this is now first of all, let's just have a look. Let's have a look at this chart. So this is the futures chart over at Black Bull. We've now rolled over into the April contract. And that rollover was this black candle that you can see there. So that was the rollover. It's not shown here because it'll show as a gap on the day chart, but here it's just a candle. But we just rolled over just a couple of cents, really. How many cents was that? So we sort of from about 297 to about 291, so about 6 cents, and we bounced out of there from now. So depending on what contract you're trading, you'll be either trading currently at 298. Sorry about that. I had sounded like a rat coming out of my cupboard, but I think it was just something falling over. Or you might be trading, let's just have a look at this on the other futures here at FXCM, $3.05. So this is the previous contract trading at $3 and call it 6 cents. And the April contract that we've just rolled over to in Black Bull is trading at $2.98. So 8 cents difference. Not a big difference, but an 8 cents difference. So some of you will be trading the previous contract, some of you being rolled over into the new contract already. So it's a little bit difficult. And what I'm going to try and do is tomorrow have a look at this again, because some of you will have rolled over by tomorrow, some of you rolled over this weekend, some on Friday, and some will be on Monday. And the Henry Hub futures roll over, I think, on Wednesday. Let me have a quick look. So depending on your broker, let's have a wee look. I need to look at the day chart on the Henry Hub here. All right, why is that not loading? We've got oh, there we go. Okay, so here we go. This is I think it's TradingView goes slow on a Sunday night quite often. So we roll over into the April contract on the 25th. Okay, Wednesday the 25th. It's the 22nd today. So in 3 days' time, the Henry Hub rolls over, but many of the brokers will have rolled over already. So this is still trading at the old contract price, the Henry Hub, at around $3.05, whereas we're already trading the new front month, the April contract, at 298, as I said below. So I'm going to use this chart, considering that by tomorrow or tonight probably, or at least certainly by Wednesday, everyone will be rolled over into this new contract, which is now currently trading at 298, 2982 to be precise. Right, so where does that leave us? Well, we still haven't broken down through these three supports down here, and I'm still long. And I've still got space to add more size, but I'm not too sure what's going to happen next. I think this rollover will be the weekend open rollover will be quite informative. But I do keep in mind that these three blobs down below on the left-hand side here are all fair and valid targets. In fact, we may have just reached that one already, the first one. Not sure if we got quite there, almost a fraction away from that low there. So we've still got these two previous lows. Let's have a look at the price on these lows. And that one down there is at 278. And the one even lower than that is at 271 and a half, 272. So 278, 272. And this one that we've already tagged was at, not quite tagged, almost at about 290. I think we got to 292 or 291. So yeah, so all of these are still up for grabs, really, including that one there that we haven't yet tagged. And I don't know what's going to happen. Now, it does look like there's colder weather on the way, and HDDs will increase. And so we may, because of that, see a gap up, and we'll find out what the weather models look like. I normally do an update on natural gas on a Monday after the weekend has rolled over, opened, and we know where the price opened, and we've got some more weather data coming in so we can make a better judgment. It's very difficult on a Sunday night, apart from say, well, the weather changed a bit, and this is the way the COT report looked like 5 days ago, which is obviously changed by now too. And we don't know quite what the weather forecasts, the models for next week and the week beyond that look like. And so we're waiting for all that data. We're waiting for the new COT report, and we're waiting for this market to open up at a price, either at the current price, 298, or we're going to gap up or gap down. I don't like to make predictions on what's likely to happen, but I have to say, and I'm going to go back to the 4-hour chart, that we've still got all of these gaps way above us that have not been closed. One there, one there, one there, and one we've already closed. That's a contract roll gap, but all of these ones, that big one in the middle of the page is a weekend gap. Then we've got another largish one now in the middle of the page, another weekend gap, and we had another one down here, which was not even quite filled. We almost filled that entire gap. There was another weekend gap, but we didn't quite fill it. It's still not completely filled. And then, of course, we got those 3 swing lows below us. So that I showed you on the previous chart. So what are we going to do? Well, I'm long with a very small position. I'd like to get long on natural gas. I think the range, as I keep on saying, is roughly between $3 and $5.50, let's say, allowing for spikes down below $3, down to about $2.70, down to those 3 blobs that I showed you, and allowing for spikes above $5, $5.50, maybe up in, even into, and these will all require extreme circumstances, and supply and demand shocks to get into those much higher levels, but allow for that to happen if that occurs. So yeah, so that's the kind of range, and we're right at the bottom of this range right now, very close to $3, and I think that's the bottom of the range. And the reason that natural gas is generally going to be bid up over the next number of months and probably years and maybe even decades is because of the demand for electricity, and the it's very difficult to bring nuclear plants online. It's very difficult to change to green energy products are expensive and not sufficient. There are all sorts of experimental ideas going on, but natural gas is there. It's relatively cheap and it's very, very plentiful. And the infrastructure for using it for electricity supply, creation, manufacture of electricity is all there. And so it's a very important product, despite the greenhouse problems that we have with methane leaking into the atmosphere. Much worse than carbon dioxide. So that's natural gas, folks. So I don't know what's going to happen. I think $3 and thereabouts, we're about $3 just under now, is kind of the bottom, but I'm allowing for spikes down to those blobs. And then if you're trading on the spot, which is now at $3.05, you might be looking, if the futures are a bit confusing, and particularly in this rollover week, you might want to look at trading a continuous contract or continuous ETF, something like over here at Pepperstone or FXCM. There's another one at Pepperstone this is FXCM rather. I trade at Pepperstone. Here's another one. That's the futures. Here's the Pepperstone ETF. And so you can trade this. And that it has gaps, weekend gaps, as you can see. There's loads of weekend gaps on this chart too, but it doesn't have rollover gaps. You pay for it in terms of contango and backwardation, nightly fees and or grants, but you don't have to deal with the rollovers every month. So let's look at oil. Now, oil is interesting because we've got Iran coming up, like it's an event that we're all looking forward to. Of course we're not. It's crazy. It's crazy to think that there might be a war against Iran. It's just nuts. But that's the case. And of course, that might drive oil up because of the transport problems around the world, particularly in the Straits of Hormuz, and also the oil that Iran supplies, surreptitiously to various countries might also be not flowing out. Not that should affect the price of WTI West Texas Intermediate all that much, but it may affect the flow of oil out of the Middle East in general and create supply problems worldwide. So because of that, we might see the price of oil moving up, and you can see we have moved up over the last couple of days. This is a day chart. It's only been the last 2 days that we've moved up quite sharply as the saber rattling has increased and the talk of war has ramped up quite significantly, with Donald Trump saying it could be within days or even hours now. And as he's been, as this rhetoric's been stepped up, we've moved up. In fact, we broke through that previous swing high, which was formed on the 29th of January, and we closed above it, which is very bullish. I've now hedged my short positions, which were from down here. The moment we closed that candle on Wednesday, I hedged the entire lot. It's not a big position, but it's a position, and so I don't want to be holding it with the idea that I have in mind that we might move up into that level over there or even higher up, depending on what happens. in the Middle East. I must note that every time WTI oil and Brent crude have rallied up like these in these big sharp moves and spikes up because of geopolitical tensions and war and even tariffs, the price of oil has just collapsed back down again, repeatedly making lower highs and lower lows, trading within a broad channel. We're pretty close to the top of the channel now, and my contention is that we may have to reach it into this order block and the swing high, and we may even, depending on how things go, have to reach even higher into close to $80 rather than stopping at close to $70. Nevertheless, it does look like we're going to get to the channel top. If you'd like to be long on oil, it might not be a bad idea to buy pullbacks, buy dips. But bear in mind that oil is most likely going to probe up into these levels and try and move back down again, back down towards the bottom of the channel, back down to the $55 twin bottom. It's now a triple bottom because we tried it for a third time. You could even say a fourth time, and bounced out of there. And I think it may be that we test it for a fifth time. I'm not convinced that oil is generally moving up. And in fact, we've got a bearish chart on our hands here, and a bearish channel at least. And I think it's a very good chance for us to test up into that zone where I'll be looking for shorts. Now, because I'm hedged, I'll be taking profit on the long side of my hedge somewhere where I see a reversal occurring, and adding to the short side and try and swing this both ways, if you will. And so that's the sort of zone up into that blob and this order block, and around about $69, $70. We probably have to go through 70 to 71 or 72 to take out the round number and clear out any liquidity at that sort of level. Also notice the RSI is pretty much overbought almost again. If I zoom in, at the moment it's in divergence. Actually, we've got a lower high on the RSI and a higher high on the price chart, and that is a negative bearish divergence, which could mean that we might top sometime soon on WTI oil. For now, I'm going to wait to see what happens, and of course, this is going to be flung around like a rag doll the moment we hear what's going on with Iran, and whether it's good news or bad news, whether it's war or no war, whether there's a capitulation or a fierce resistance, it makes no difference. This oil price is going to go up and down like a yo-yo, and you better be careful. Trade small, don't use big positions, use perhaps larger stop levels or hedge levels, allow for a bit of movement and violence, and size down. That's my advice on those. I'm also long on uranium and looking to get long on lithium. I may have delayed lithium for too long, but it looks like we may have a chance here, bouncing off this 20-period moving average here on the day chart. And I'm looking to get long on lithium again, although the RSI is a bit high. I wouldn't mind if we came back in a little bit on lithium, but we've taken a lot of profit on this one already. And you can see our various long entries starting all the way down at the bottom here, and we've taken profit on every occasion. We're now not in this trade, but I would like to be back long on a pullback. I'm also long on uranium, same sort of pattern. And uranium, as I was saying before, it's one of those energies that is probably going to do pretty well. And if we look at this on the weekly chart, considering that more and more energy is going to be needed all the time. This is the weekly chart on URA, the Uranium Global X ETF. And look where it could go, right? At 130, we're currently trading at about 50. And we've got a beautiful U-shaped parabolic bottom. And I think we're going back up to that level and probably a lot higher on URA, the Global X Uranium ETF. So I'm long on that one. And I'm just basically looking to buy dips on URA. There's another one that we trade, UEC, another one, uranium-related stock. But my basic strategy is pretty much like any, at the moment, even though it's a commodity, to just buy dips like any other stock market stock, which you expect to go up all the time, even though it's a commodity-related stock or name. Right, so that's that. And now we must talk about metals. And thankfully, we got long on gold, and that's going up quite beautifully. You can see my long entry there down at this last arrow. We've been long on gold quite often. We've taken profit, been long again, taken profit, and we're long again now. And it's broken up through the 20-period moving average, through the channel center line, and heading up. Now, I don't know how high we can go, whether we can even get to this previous all-time high or further, or if we just, we're not going to make it. Look at this level that we're at right now. I'm going to draw a horizontal line there. That's a flat top, busy trying to break out. It's in purple. That's great. I'm also going to put a Fibonacci retracement right from the top down to the bottom. If I can find the top, I don't know where it is precisely. It's under that red arrow, and I can't find the bottom either. From the top down to the bottom, it's somewhere in that arrow. Doesn't have to be precise. And I'm looking for the 61.8% Fibonacci and the 78.6% Fibs as potential resistance levels. And you can see we're almost at the 618. In fact, the 618 might as well be in line with this purple level because it's more or less at the same price. So consider that the same level. And notice that we've got an ascending triangle forcing up into that level. It looks like it's going to break up through there. And the next stop, the very next stop, is the 78.6% Fibonacci on gold. And that's at $5,330. And if we get there, that will be the last chance test for this move. If we fail there, we've got a good chance of a significant retracement. But if we push up through the 786, we're probably going all the way back up to that high, looking for a potential double top, or more likely a continuation of this gold rally. So we're long now on gold with an ascending triangle into a flat top breakout with what looks like a shaven head candle from Friday, incredibly bullish. The open today and tomorrow should just see this candle, this move continue right from where we are currently trading. And so because of that, I've had to hedge my short silver trade. The long gold was a hedge against my short silver. So, and silver's a complicated one because I'm hedged on silver as well. But we had a short position down there and we had a long position on gold. One of them was always going to work out. Either they were both going to correct and move back down to better retracement levels, cheaper levels to buy at, or they were both going to move up. I wanted to be in both of them and I didn't want to miss out. So I chose the long gold, and the moment silver moved up through, as gold moved up to its level and we broke up through that purple line on silver, through that resistance level right there, I immediately hedged my silver trade. So I've got a tiny position there, only 5%, fully hedged. And we've got a much larger hedge position on silver, which I'll talk about another time. We talked about last week. So I have a very small hedge position here, 5%, but we have a bigger, double the size, long position on gold. And I will add more size to this gold trade probably tomorrow. If we break up, retrace back to the purple line, the breakout level, and then I'll look to try and buy some more gold and ride this up to at least the 78.6% fib that we spoke about a while back, just a few minutes ago, up to there at about 5330. But, we might just get a little breakout. This is a day chart, so it's a bit clunky, a bit of a breakout, bit of a pullback up to the 78.6% fib, and then we'll decide what happens thereafter. We'll carry on up to the top and maybe break higher, or we're going to retrace quite a long way down and then potentially below that swing low, back down to much more significant retracement levels, and maybe even this triangle breakout or even that triangle breakout, more unlikely to get that far back down. But nevertheless, that's the sort of thing. So I'll be looking to add to the gold position and looking to unhedge the silver position at some point. So that's all going swimmingly. I'm also long on copper, and everyone's excited about copper. I'm hearing a little bit too much about copper bullishness, and I keep my ear very close to the ground in the markets. When I hear everyone saying buy copper, I start to think maybe it's probably time to sell it. But we are long, and we do have a massive reversal right in the center of your page here. Big rally up and a sudden collapse, engulfing candle, which is still in play, not defeated. In fact, we're making lower highs still. We're still below the 20-period moving average on copper. Everyone's calling for this to go to $10, $20, $30. Well, you've got to be a little careful when that happens. And although I'm long, it's a small position. I don't know what's going to happen here. And once again, like we said last week, we're stuck still between the 50 and the 20-period moving averages at the point of control on this chart. And it could go either way. But anyway, I've chosen the long side, so I guess I think it's going long. Now, Bitcoin, I don't know anything about this. I really don't want to, not that I'm very, very busy trading Bitcoin, but I don't know what's going to happen next. I'd refer you to all of the last videos from last week, the technical videos and last week's live stream, because literally nothing has changed since then. We're moving sideways in this yellow band until it breaks up. If we were going to break out of here in a bullish reversal of that big sell-off in Bitcoin, we would have burst out like that with a breadth thrust back up to the channel top. But we didn't. In fact, we flopped, slumped down. That's the way it should have looked for a proper reversal out of here. In fact, it did exactly the opposite. And it's doing nothing. We're making lower highs even on this 4-hour chart. Lower highs. We've just not this weekend made another lower high. There's a, okay, you could argue that one's slightly higher than the previous one, but let's start here. There's a high, lower high, lower high, lower high just formed this weekend. We've broken down through that support already. So it's actually already a slightly lower high. So not looking good. And I think depending on the way we break out of this range, we're going to trade it. I think we could get down to $50,000. We could get down to 45. I think most likely down to between 50 and 55. I've done a lot of work on these projections, and I don't want to spend too much time on it today. But just to say, if we just simply follow the bear flag breakdown, we'll get down to the bottom of this red arrow, and that's just around $52,000, and down to that bottom of that range and that spike low. And it's simply just to move down, flagpole, flag, and the flagpole. Just a perfect technical pattern. Takes us much, much lower. And as we're talking, there's no evidence that this is turning around at all on any time frame, not on the weekly chart, not on the daily chart, and not on the 4-hour chart. In fact, the 4-hour chart, out of all of them, looks the worst. You'd expect that if you're looking for any sign of hope, that you look at the short-term charts and say, well, maybe we've got a little turn up on the 5-minute chart or the 1-hour or the 4-hour, looking a little bit positive. Don't worry about the day chart and the weekly chart. They're not looking good. But the 4-hour, that looks great. Well, we can't even say that. The 4-hour looks terrible. Everything looks terrible. So if we break down, I've got a very small position within this range. I've got a much larger Bitcoin position from about 91,000 long, which is fully hedged at around 89, 87,000. I've also got a very tiny long position within this block, which I'll either hedge if we break down, expecting us to move down to 50 to 55, or if we break up, I'll maybe try and add some more size on and see maybe this is going to turn around, but I don't hold a lot of hope. And I think we're only going to see Bitcoin actually moving out of its range, bottoming, moving up in about 4 months' time. That's my personal feeling. And I think we might make a lower low in between. So down to into the low 50s before we move up. And that might take 4 months. Now let's look at the NASDAQ and the S&P. Great days yesterday, Friday, not yesterday. But of course, despite the fact that GDP and the PCE were not good for us, very poor GDP number and quite a high tick up in inflation. But despite all of that, in other words, the Fed's not likely to cut, but they might want to cut because they might have to stimulate the economy because the GDP was low, but we've got jobs problems. We also got jobs problems, but inflation might tick up and PCE was already too high. But despite all of those considerations, the market ended very positive on Friday. Not only the NASDAQ, we still are facing down this blob. And I think if we can get up and through there, we've got a very good chance of moving higher. If we break down through this zone, which I think is now, I'm going to call it a bull flag, interestingly. People were calling it, triangle failure, breakdown through the triangle, bear triangle, whatever. I've just put a big block around it, this whole square zone. I've just called it a bull flag, There's the flag run up. There's the bull flag. And actually, if you take the bottom up to the top of the bull flag and stick that on there, that could actually be the next target for the NASDAQ, like 40,000 or something. I know it sounds ridiculous, but there you go. You never know. I mean, when the Dow was at 20,000, you didn't think it would get to 45,000 in a year and a half or 2 years or so, did you? Right. So that's what I think is happening. And we need to get to the top of this block. But first thing, we've got to get through this blob, all of these moving averages. They're all here. The 50, the 20, the 100, and the 200 is the only one that's below us, supporting us. We've got to get through all of them, the two triangle zones, and the point of control on this chart. But if we can follow this green path and get up through there and hold for a start above that black trend line, and then hold above that flat double top breakout, come back, retest it successfully, and bounce out, then I think we've got a very good chance of moving quite a lot higher into like 28,000 on the NASDAQ. I think the S&P is looking very similar, so I don't want to go over all of them, just to save time. But the S&P doesn't look very dissimilar to the NASDAQ. And although it's not quite as bull flag-ish or rectangle-ish, it's doing pretty well. And actually holding the 100, whereas the NASDAQ isn't. This is above the 100. And actually, on Friday, we closed above the 50 and above the 20 here on the S&P. So I'm long on the S&P. I'm long on the NASDAQ, and I'm long on a whole bunch of names as well. And quite a lot of these moved up beautifully, including Google, which we got long on a couple of days ago. Massive move up on there, just bouncing off the 100 moving average and that swing low, as good as it gets, really. We got long literally at that bottom level. Let's put a line there. Literally got long on the confirmation of the bounce off there and the 100 moving average, and that flat, not flat, that swing low, with swing low, but with a shaven bearish candle, touched it to the penny and bounced out. We got long. So that's a really good one. I'm long on Nvidia, moving up. Coinbase moving up, even Coinbase, despite the woes of Bitcoin. German 40, we're long on that one too, moving up. Netflix, I don't have a position on. And then we've also got positions on a couple of these names. Some of them are hedged, but Avgo, Palantir, I'm hedged, but I'd like to get long again. Microsoft, I'm hedged, but I'd like to get long again. TSM, Taiwanese semis, I'd like to get long. Haven't had the chance. I'm long on Tesla, long on Circle. And just to talk about the dollar, one more thing on this page is that the dollar, I think, is going to eventually end up a little bit weaker down into the low 90s. But react, don't predict. But as we saw from what's going on with tariffs and the PCE and the GDP, it could be that the dollar is actually going to strengthen a little bit before it shows further weakness. And if we look at this day chart, you can see that there's a good argument to be made that we've made a double bottom here after weakening that double bottom over there. We fell through it, giving the argument, and it's generally making lower highs, making the argument that it's now weakened and that we should fall through it. Well, we tried again, but just bounced off the lower 200 period Bollinger Band after an oversold RSI and moving up into the moving average cluster again. So I think that we're going to faff around in this moving average cluster, but eventually I think we'll break down and move into the blob. But I'm allowing for a move to the top level again. I don't think we're going to get above about 100. I think that's the top for now, and I think the bottom for the dollar index is at around about 92, maybe even 90, maybe even 88, and we're currently trading at 98. So there's more downside than there is upside on the dollar, I believe. One more thing on this page: look at the Bollinger Bands, how squeezed in they are. A pincer movement. Bollinger Band squeeze means that volatility has dropped off dramatically, and you don't often see such skinny Bollinger Bands on the dollar index. And that means that the next move is likely to be fairly explosive, whichever way that might be. And depending on all of this geopolitical stuff, tariffs and wars, not just the Middle East, but Russia as well, Ukraine, and tariffs, and the global resetting of the fiscal relationships between countries, and alliances are shifting and moving and breaking, the dollar could move one way or the other very dramatically, depending on how the White House wants it to move too. And if anything, I think they want a weaker dollar. They'd be happier with 80 on the dollar index than 100. And I think that's eventually where we're going to be moving down to, lower rather than higher. But allow for spikes up to 100, maybe 102, up to that black line. And maybe we've got to trade within this 100, 100 to 90, 102 to 98 range for a little bit of time before, and allow things to settle down internationally, geopolitically, before we can see the dollar just trickling down a little bit further. And folks, that's all I think I've got to say on those charts. And I think I should now look at some of the questions, if there are any. And if there aren't, I shall bid you farewell. From Emily: drop one specific decision you're stuck on in the chat. And invalidation, a key level, structure versus momentum, stand aside rule, etc. And James will work through it live. Thank you, Emily Trading. Thanks for offering my services. So I'll wait for questions to come up. Yes, I can reposition the QR code, but I can't do it today. Maybe I can actually. Let's see what I can do. Yes, I can. Somewhere. Maybe not. Hide. There we go. Fantastic. All right. Let's carry on. Possibilité in French. Bear flag on WTI. Emil, let's have a look. You're saying, is there a bear flag on WTI? I don't think so. I don't think so. A bear flag. I mean, a bear flag, I think what you're talking about maybe is like the 15-minute chart here at the top. I don't know. I think maybe you're talking about this zone here. Is that a bear flag? It could be. Sure. If you look at the 50, I don't trade the 15-minute chart much myself, but if you zoom into this 15-minute chart, there's a lot of order blocks here, 3 on top of each other. So it's a big zone of support and resistance, also the point of control on this chart. But if you look at it on the 15, it does look a bit weaker than on the day chart. We've moved up, had a sharp move down, came up to about, I'd say that's 61.8% retracement of the move down from the top. Let's just draw that in. And then started falling down again. Let's get rid of that. And then started falling down again late on Friday. In fact, just the last 15 minutes. But let's just see what retracement that is. Probably a 78.6 or a 618. Almost 78.6% fib right there. So maybe that was a top and it's moving down. I don't know. But of course, we don't know what's going to happen with the Middle East and everything that's going on over there. And we'll have to just wait and see how it all plays out. But it will get messy and choppy and weird. That's the 4-hour chart, actually. Looks quite good. Also, slightly toppish, although we are above that swing high and we're still above it and we haven't moved down significantly below it. So, yeah, I wouldn't place any major bets one way or the other on oil until we find out how the stuff's going to go down. All right, Tanil, no worries, mate. Probably bullish for silver, MT. Probably bullish, mate. Cocoa. All right, let's. I'll come back to cocoa if I have a chance, Alan. But basically, I think cocoa. All right, I put up on X, actually, Alan. I put a tweet up on X. This is going to be the easiest way. Go to my X account on X. I put some cocoa. I put a cocoa chart up there last week. Go and have a look at that and have a look at my comments. And I think cocoa is basically going to drop into support in the 2.5 to 2,800 range and remain there for the next 3 or 4 or 5 years. And we're going to have to get used to range trading cocoa like we have done in the past between 2,000 and 4,000. And I think that's what's going to happen. And so we've got to get back into that familiar old range. And we're going to be trading in the range, the commodity range that cocoa trades in. But it's just going to drop down there a bit. So it may have to rally up a little bit first. I don't know. But I think eventually it's going to go lower into that range. All right. First Majestic, silver miner. I don't know, mate, MT. I don't follow silver miners. No worries. Okay, folks, I hope you enjoyed all of that. It's a slightly shorter stream today, about 40 minutes. But if there are any other questions, I think I've covered every market. And I just want to make sure that you're all very familiar with the fact that this weekend and the coming days could be very, very, very tricky when it comes to trading energies and metals and Bitcoin. And I think stocks will generally be okay. This is my feeling about it anyway. If war and uncertainty generally aren't going to cause a massive sell-off in stocks, but they could cause massive changes in energy prices and in metals prices, particularly gold, but silver as well, and copper as well. So all of these metals are influenced by not only war, but also electricity and AI, electrical demand and all that sort of thing. So yeah, that's it. No, I won't exit my longs, Vishesh. I don't think so, mate. I think I'll be looking to add some longs, if anything. Wheat and coffee. All right, folks, I'm going to get my commodities page up. I was hoping to avoid it, but seeing as you're being pretty persistent, I'll get up the commodities page. And because I'm not trading commodities much at the moment, I'm trying to allocate those resources elsewhere into other markets, which I think offering better opportunities. This is cocoa, and as I said, I think we're going to move down into that range down at the bottom of the page at around 2,500, and we're going to trade in that range between that purple line, the big one, and let's make another purple line, and the big one at the bottom. And I think that's going to be the range, roughly, something like that. It's a range or a zone, really, something like that for the next number of years. And if you look at the last time we got stuck in that range for so long, really it was from 2017 to 2024. So about 7 years, we were trading between 2,000 and 3,000. I think that's what's going to happen. We've got to drop down into that zone, into between these two purple lines, and then we're going to trade from the top to the bottom, swing from the bottom to the top, swing around, reverse again, bottom to top to the bottom, and trade that range. I think that's where cocoa is going to be going. That's a weekly chart. And then, let's just go through these. I don't have any positions on any of this stuff at the moment, but here's sugar. Yeah, I mean, look, sugar's been very disappointing. I think eventually it's going to bounce out of here. It is a little bit influenced by energy prices too, because a lot of sugar is used in producing fuel for cars. So, we had a long position from there. I eventually got out here on the bounce. I took a small loss on this trade, and I haven't been back into it yet. But yeah, maybe that can bounce out. We've got a number of trend lines. Doesn't look great to me. Doesn't look interesting. Cocoa, as I said, I think we're just going to dribble down into that pocket and stay there for a long time. Coffee, probably the same, actually. Coffee is about to try and break down through support. But before it does that, it might have to come all the way back up to the red line resistance first. I don't know. I do know this purple one's not going to work out anymore because we've passed that already. So either we're going to move straight down on coffee or bounce out. I would go for the bounce, really. I would actually rather try the bounce out of here. And let's just zoom in. We've got some reversal candles here on the day chart as well. So if you like this level holding, it's held for 1, 2, 3, 4 days, a whole week, and also a reversal doji in the middle at a very key and important level after being very oversold. And I guess if you look at the RSI or the stochastic or the MACD or any of the other oscillators, you'll see this is incredibly oversold too. So a bounce out of here wouldn't be unusual. We did try to bounce, a false bounce, and then came down to the proper level, and we're trying to bounce again here. That's coffee. So I would go for that path, up and then down rather than straight down from here, but I'm not going to be trading this personally. Soybeans, we've been long on soybeans, good deals struck with China and Trump. Put us long twice on soya. We got out at the top. Have not been back into soya. It's got stuck there, hasn't moved since. And so not much going on there. We talked about lithium. Wheat, again, I've taken profit on wheat. We got out of our trades. We got long at the bottom there. And wheat's doing a great job. It's breaking out of this zone. It didn't have to get back down into the lower squiggle down here, into the apex of this falling wedge. It bounced off the top of the wedge, which was excellent. And so we got long over there. We got long twice on wheat. I got out of wheat somewhere at the current price, slightly below the current price. Once again, I'm not trading wheat at the stage because we may have to move back down from here. Maybe that's the top of the range. You can see there's a general range in this sort of zone that wheat might struggle to get through. I'd rather allocate that money, those resources, to other opportunities. And while we're on the same page, we may as well talk about corn. Corn, same sort of thing. I was hoping for this to move up. All these people talking about the big commodities super cycle, all of these things swinging up as the dollar weakens. Well, the dollar didn't weaken, it got stronger. And commodities didn't get stronger, they got weaker. And we've stuck down at the bottom. Corn's another one, not doing very well and not really moving since, this is going back to 2024. Stuck here still down here at the bottom. So yeah, unless you're range trading this on a short-term time frame, and once again, we may not get up here. We did get long twice, we took profit, and we're trying to get back up into that level right now. Don't like any of them really, and so basically abandon them. And then cotton, another one that we were long on. Again, I got out in the middle at the green line here at break even, having got long down there and down there. But look how long cotton's been here. And I think cotton will eventually break up. I think this looks great. But it's taking so long and it's slow moving and can be expensive to hold some commodities. And I'd rather allocate that money into gold or silver or Bitcoin or stocks, where I know I can put my money on Google, I can put my money on gold, I can put my money on Palantir or on the NASDAQ or the S&P or the German 30 and make money immediately the same day, rather than waiting for weeks and months for cotton or corn or soybeans to move. But I think they all look quite good. But depends what you want to do with your funds. If you want to tie them up with slow moving commodities, which may or may not get going, I don't know. It's up to you. I've decided not to. I prefer to trade some of the other stuff now. So there you go. And that's it. Thank you, Vishesh. Yeah, I hope so too, mate. Thanks, Sean. All right, folks, have a wonderful evening. It's Sunday night. Go and have some fun now. Turn all of this stuff off. Markets will be open in a couple of hours' time, few hours' time. Bitcoin's on the move. We didn't talk much about it, but it's one thing that I'm busy trading. I'm wondering what to do with Bitcoin and watching this very closely. Until we make new higher highs on Bitcoin, we can just put a little trend line. Let's just use the trend line. That's all we have to do. Just put a trend line on here. And until we break above that trend line, don't get too excited about Bitcoin. That's all. When we break above that trend line, I'll put it in big black. When we break above there, you might consider starting to get a little bit more enthusiastic and excited about Bitcoin longs. And then we've got the channel top. Then we've got loads and loads of resistance. And until we see something like this green line getting going, which is obviously not doing right now, nowhere near it, not even anything, not even thinking of it, until we get something like that, Bitcoin's just dead in the water. So don't, it's another one that you may not want to commit too much money to, and rather commit to, I'd say, gold, silver, NASDAQ, S&P, etc. And maybe even copper. And maybe even the dollar for the moment. And while we're talking about copper and talking about gold and Bitcoin in the same sentence, Bitcoin gold is also just slumping down. And I think now that this is another good reason why Bitcoin may have to go quite a lot lower, is that the Bitcoin gold chart is now at the lowest level. Bitcoin is at the lowest level it's been against gold ever, relatively speaking. And I put this chart up on X on Friday. And now that we've broken so far down below this 300 period moving average, which has been a support line, as I say, I always laugh because they say, well, it's always a support. Well, we've only touched it twice before, and now the third time we've broken through it. So 2 out of 3. It's not much of a rule, is it? Not much of a statistical thing. So now that we've done that, I think we've got to come back down to the 78.6% retracement. That's this lowest black line where I've got this bouncing arrow coming out of. It's also this double bottom. I think this is where it's going to go. I really do think this is it. This is the level where Bitcoin will bounce. Beautiful head and shoulders, double bottom, left shoulder, head, inverse head and shoulders, left shoulder, head, right shoulder, bounce out. If we can get back down to the shoulder level, we don't have to complete the head level, just to the shoulder level on Bitcoin gold, that will perform that will turn this into a bull flag, square rectangle, like I drew on the NASDAQ. You remember this on the NASDAQ? Like that, the green one at the top of the page? Well, if we do the same on Bitcoin, where's it gone? Oh, Bitcoin gold. If we do the same sort of thing there and just draw a big block, let's do it. Big rectangle. Let's see if we can do it. Big rectangle. I think we can do it. Like that. That is the bull flag, right? And that's what we could be looking at. And we should be done with this by about May, June, July, something like that this year, and maybe have a chance of bouncing out. But that looks pretty similar to the NASDAQ, and I have the same sort of hopes for the NASDAQ, although the NASDAQ did reach the bottom. This has not reached the bottom. It's getting close, though, and I love that inverse head and shoulders here at the same 300 period moving average here on the Bitcoin gold chart. Absolutely fascinating. And I think that there, when that bounces, if it bounces, and if we use that inverse head and shoulders shoulder line as the bounce level, I think we've got a fantastic chance to look to get seriously long at Bitcoin. Throw this chart up onto your screen, keep it in the background, set some alerts, and keep an eye on it because it could be a good one. And then Bitcoin dominance, I don't pay much attention to this generally, but I know the altcoin traders do. They want to see this moving down. And yeah, it's moved down a bit, not a lot. But we are below the moving averages. And the moment this starts moving down, there's a bit of hope that everything will move up, particularly the altcoins. And that's it, folks. I think, I know there's a big, horrible thing in front of my face while I'm talking. I really don't like that. All right. Good night, Emily. Good night, everyone. And I'll see you in tomorrow's video. We'll talk about natural gas tomorrow. I'm doing a natural gas video tomorrow. Make sure you subscribe. Click the bell button so that you get an alert when I drop the video. I don't know what time I'll drop it. It's normally not a particular time during the day, but it'll be somewhere during the European session. Click the bell button, click the subscribe button, click the like button. I'll see you in the next video. Take care. Hope you enjoy the show. Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.